Meta's Reality Labs, $4.53 billion loss in Q2. What's next for the Metaverse? In a striking revelation, Meta's Reality Labs has reported a staggering loss of $4.53 billion for the second quarter, underscoring the financial challenges facing the company as it strives to build the Metaverse. This news was disclosed during the company's earnings announcement on Wednesday, where it was also noted that Reality Labs generated only $370 million in revenue during the same period. Interestingly, analysts had anticipated an even larger operating loss of $4.99 billion, with projected sales slightly higher at $381 million. Reality Labs is responsible for developing innovative products, including the Quest series of virtual reality headsets and the Ray-Ban Meta smart glasses, which are a collaborative effort with the renowned eyewear manufacturer EssilorLuxottica. Meta's ambition is to push the boundaries of technology with products like the Orion Augmented reality glasses, which are designed to pave the way for a new era of immersive computing experiences. However, the journey to create advanced virtual reality VR and augmented reality AR devices is not without its financial burdens. Since late 2020, Reality Labs has accumulated nearly $70 billion in losses, a staggering figure that highlights the high stakes involved in this cutting-edge technology sector. Just a few months prior, in April, Meta reported a $4.2 billion operating loss for Reality Labs in the first quarter, despite generating $412 million in sales during that time. While the Quest VR headsets have yet to achieve blockbuster success, there are positive signs for the Ray-Ban Meta smart glasses. In a recent announcement, EssilorLuxottica revealed that sales of these smart glasses have more than tripled year over year in the first half of 2025. Additionally, the partnership between Meta and EssilorLuxottica has led to the introduction of new products, such as the Oakley Meta smart glasses, which debuted in June. In a move that reflects the ongoing restructuring within the company, Meta disclosed in April that it had laid off an undisclosed number of employees from its Oculus Studios, which focuses on VR and AR software development. This decision raises questions about the future direction of Reality Labs and whether the company can turn its fortunes around in the competitive landscape of immersive technology. But here's where it gets controversial. Can Meta continue to justify these massive investments in Reality Labs, especially when the financial returns remain uncertain? As the company navigates these turbulent waters, what do you think? Is the pursuit of the Metaverse a visionary leap forward or a costly gamble that could backfire? Share your thoughts in the comments. Reality Labs. The billion-dollar losses continue. Believe it or not, Reality Labs is still bleeding billions. Yes, you read that right. Despite its ambitious vision for the Metaverse, Meta's speculative division continues to post hefty losses. In the second quarter of 2025, Reality Labs reported an operating loss of $4.5 billion, a slight uptick from the $4.4 billion loss in the same period last year. But here's where it gets controversial. Is this massive investment in unproven technology worth it? Some argue that the potential rewards could far outweigh the costs, while others question whether Meta is heading down a path of financial ruin. The silver lining, if you can call it that, is a modest 5% increase in revenue to $370 million, thanks to the growing popularity of AI glasses. However, this boost was partially offset by declining sales of their popular Quest headsets. Expenses, meanwhile, ticked up by 1% to $4.9 billion, mainly due to higher costs associated with technological advancements rather than increased staffing. To put this into perspective, Reality Labs hemorrhaged $17.7 billion in the 2024 fiscal year alone. In 2023 and 2022, the numbers were equally staggering, with losses of $16.1 billion and $13.7 billion, respectively. And this is the part most people miss. Meta's CEO, Mark Zuckerberg, has consistently maintained that Reality Labs is a long-term investment, despite the mounting losses. During an investor call at the end of 2024, CFO Susan Li acknowledged that losses would likely continue to rise in 2025, primarily due to increased spending on AI glasses. In an attempt to curb the bleeding, Meta recently announced layoffs of over 100 Reality Labs employees in April, following a broader 5% workforce reduction earlier in the year aimed at improving efficiency. These cuts are part of a larger trend. In 2022 and 2023, the company let go of 21,000 employees across various divisions. So when will Reality Labs finally turn a profit? It's a question on many investors' minds. Zuckerberg has suggested focusing on expanding distribution and improving efficiency. But the road ahead remains uncertain. As Meta continues to pour resources into its metaverse ambitions, the debate over whether these investments will pay off in the long run is likely to intensify. What do you think? Is Meta's strategy sound, or are they chasing a pipe dream? Meta Reality Labs posts $4.5 billion loss in Q2 2025, despite $370 million sales. This is a shocking financial setback for Meta's Reality Labs, which saw a staggering $4.5 billion loss in its Q2 2025 earnings, despite only generating $370 million in revenue during the same period. The AR/VR division has now faced consecutive quarters of massive losses, raising urgent questions about the viability of its ambitious projects. Let's break down what's really going on here. Meta's latest report, https://investor.atmeta.com/investor news/press release details/2025 Meta reports second quarter 2025 results. Default.aspx reveals that Reality Labs losses have grown worse than last year's $4.4 billion deficit. Over the past 6 months, the segment has already sunk $8.7 billion, more than double the $8.3 billion loss recorded in the same period of 2024. This trend suggests a troubling pattern, as the company continues to invest heavily in futuristic tech while struggling to turn a profit. But here's where it gets controversial. Is this loss a sign of failure, or is it a necessary risk for long-term innovation? Many experts argue that AR/VR is still in its early stages, much like the smartphone revolution a decade ago. However, others worry that Meta is chasing a distant horizon while neglecting more immediate opportunities. And this is the part most people miss. Reality Labs isn't just losing money, it's burning through cash at an alarming rate. Bill Rumpo, a lifelong gamer and Toronto Maple Leafs fan, has been covering these stories for years. With a background in editorial SEO and guide writing, he's dedicated to explaining complex tech trends in simple terms. His work, like this article, aims to help readers navigate the murky waters of Silicon Valley. Follow him on Twitter, @RumpoPlays, for more insights. So what do you think? Is Meta's gamble on AR/VR worth the risk, or is it a doomed venture? Share your thoughts in the comments below, because the future of immersive tech depends on honest debate.